Hello everyone, welcome to our channel. Though this video is not for beginners, we'll make an attempt to bring today's topic understandable to everyone.
I am here to share with you all my viewpoint on one of my favorite candlestick pattern for predicting uptrend in stock price movement. History tends to repeat itself, the big assumption. Most of the technical analysis were framed by observations and experiences in the history. Many experts had concluded that history tends to repeat itself in stock markets, which is the big assumption for today's topic. Today we will discuss about one of the candle pattern in paper umbrella, that is the hammer pattern.
How does a paper umbrella looks like?
In this picture we can see candles with umbrella shape at the top of the candle. So these are named as paper umbrella. Now let us understand the structure of the candle. The blue and red parts are called as real body of the candle. The thin line below the real body is called as lower shadow.
When a paper umbrella will be called as hammer.
If the paper umbrella appears at the bottom end of downward rally, it is called as the hammer. So whenever a hammer candle is formed, the immediate next candle will be formed by making an upward rally in the stock price.
How one can trade using this hammer candle? And can you explain further with any of the recent example?
So here we have the chart of Nifty Bank on a day basis. When we look at a daily chart, we can see each candle forming on a single day. So here each candle represents one day. On the chart, we can see Nifty Bank made a down rally from May 8th to May 12th. The prior condition of existing a downtrend is present here. So at the downtrend on May 12th, we are seeing a hammer has been formed. So as discussed in the previous slides, the immediate candle to the hammer has made an upward rally from almost 18,700 points to 20,000 points. Thereby, trader gained almost 1,300 points in a single day. So when a trader looks at a daily chart at 3:20 p.m. in the evening and concludes the formation of hammer at the bottom downward rally, he can take long position between 3:20 p.m. to 3:30 p.m. on that day to make gain on the immediate next day candle.
Can you give an example for traders who are willing to make quick trades within a few hours or minutes?
So here we have 15-minute trading chart of Infosys on May 21st. Now let us analyze how to make a quick trade in a 15-minute using hammer. On a 15-minute chart, one candle will be formed for every 15 minutes. So on the Infosys chart from 2 p.m. to 3 p.m. all the candles has made a downward rally, and at 3 p.m. We can see the formation of an hammer. So a trader can initiate his trade at rupees 667 and can exit on the formation of next immediate candle at an up rally at rupees 675. So as again at 3:30 we had another hammer formation. Again the trader can enter at rupees 675 and can exit at rupees 685 on the next day.
As we know, risk always comes with gains hand in hand. What if hammer pattern fails?
So here on the screen we can see a chart in which hammer candle was formed at down rally but still failed to make an up rally till rupees 1200. So a trader on seeing the hammer at a downward rally at rupees 1050 thinks to take a long position by expecting the price to move to rupees 1200, but that doesn't happen here. Instead, the immediate candle started moving downwards towards 900 rupees. Now, to keep the trader on a safe side with minimum losses, a trader has to exit at a stop loss. That is, the low point of the hammer candle is treated as a stop loss at rupees 1000. So here, loss will be only rupees 50. If trader doesn't exit at rupees 1000, the stop loss, the trader will suffer a loss till 900 and so on, where his or her loss will be rupees 50. or more.
So finally, what are the key points to be keep in mind while making a trade using hammer pattern?
So the key points are the prior trend for the hammer should be a downtrend. The length of the lower shadow should be at least twice the length of the real body. The longer the lower shadow, the more bullish the pattern and chances of trade succeeding. The low of the hammer acts as the stop loss of the trade.
Can you explain what is the logic behind hammer pattern?
The market is in downtrend where the bears are in absolute control of the markets, that is the prior downtrend as we have seen in all the previous charts. On the day the hammer pattern forms, the market as expected trades lower and makes a new low. However, at the low point there is some amount of buying interest that emerges, which in turn pushes the price higher to the extent the stock closes near the high point of the day. This indicates that the bulls made an attempt to break the price, thereby changing the sentiment in the stock. Hence, one should look at buying opportunities. So, we will try to bring before you the live formation of hammer during trading hours for your better understanding in our upcoming videos. Thank you.
Please do like, share and subscribe.